Guys, welcome. I always get the most fun days to be up here. It's always Monday. There's been the last four of them, some sort of tariff gap down, some sort of crazy news. It's funnest part about being in the market, right? I always, again, get the most fun. So, what we're going to do today is we're going to go over, kind of take a breath, do like a little for everyone, calm down, talk about what we're actually seeing in the market, what I need to see for the rest of the day and the rest of the week in order to kind of maintain my bullish stance. Just overall sectors, where we're seeing strength, where we're seeing weakness, do that breakdown. And then we're going to take chart requests from you guys. So make sure you are putting in the chat as well. Again, for those who don't know, I'm Michael Nauss, I'm a chartered market technician. You get a lot of those around here, which is fantastic. And I run statsedgetrading.com. So I'm an algorithmic kind of algorithmic and then technical trader, not someone who's going to know the fundamentals of a company or anything like that. I use statistics and then I use charts to do my trading. So that's going to be where I'm going to be coming from here. So let's grab and let's start sharing some charts. Let's just pop right into it and we'll grab the SPY here. So just start right away. Yes, we had a real bad day on Friday that got everyone spooked. All the perma bears got real loud over the weekend, as they always do. They get to stomp around and say, "Oh, I'm finally right." And then we open up today. Now, I was doing some day trading. I was on a day trading show today. We were talking about that as well. I talked, not going to brag too much, but I kind of called exactly what we saw. And it's not because I'm some sort of guru. It's just kind of, it was a little bit obvious, right? So we had a gap up off the open, but we had that low and we had that flush out. And you got to imagine, especially on a gap up, that there was a lot of stop losses placed there. Now, I'm not one that wears a tinfoil hat and says, oh, the market makers see your stop loss and they care about your stop loss. But what they will do is they will, the kids call it hunt liquidity, where if I'm someone who I'm looking to buy billions of dollars of the S&P 500, I need that liquidity. I can't just buy it as the market's ripping, or I'm going to cause the price to move up on my own and get fired. So what I need is I need stops to trigger. I need shorts to enter the position. I need people to get really, really bearish. And that's where I'm going to buy. So I'm not looking at your stop. I'm looking at where the entire market as a whole probably has a stop. Obvious place was yesterday's low. Right, gapping up on the open. There's going to be a lot of newer traders that say, I'm just going to put my stop under yesterday's low. If we break that, I have to move on with my life. And when we got that, we got this pretty nasty flush. If we go into the 2-minute chart here, so this is today's data, and then this is yesterday's low right here. You can see we bled right into that price when we got through yesterday's low. There's your flush on all your stop triggers. Then ever since then, they've been buying, and we are now above that price. To me, that close is going to be very important. If we end up closing above yesterday's low or Friday's low, which is 599.50, let's call it 600. If we can get a close above 600, I think that's actually bullish for just the overall market, because it shows that as the market was selling, there was a whole bunch of buyers that were coming in. They were waiting for that price. And that is what we've been seeing for the last 3 months. The gap down, remember this FOMC day that got everyone scared? They gap down, they use that liquidity to buy it up. We saw the same thing here. We saw the same thing these last 2 Mondays with all this tariff talk. It seems like over and over and over again, liquidity is what they're after because they want to buy this thing on the cheap for some eventual breakout to new highs. That's probably where the market participants are going to be selling, because they have that liquidity there. So that's what I'm seeing in the overall market. That's what I want to see in order to remain bullish. Is now we need, if we can hold above that low for the rest of today, we can close right where we are right now or a little bit stronger, then I think that creates a little bit of an updraft. This line you see here is just the 50-day moving average. General health guy, I'm not a big indicator person. You can see it as well. It's awesome. I see some charts requests coming through the chats. I'll certainly get to those as well. But so far, it's looking great. It's looking like there's a whole bunch of shorts that were caught again. And that's what's going to happen. So a couple sectors just to quickly look at. We have Bitcoin. It hasn't quite hit that low. It's not bouncing with the strength or the fervor of the S&P 500. It also didn't break down with that strength as well. So holding on this lows. Eventually, I expect to see the same thing we saw on the SPY today on Bitcoin, where that price gets flushed, a lot of stops get triggered, maybe bought back up, but eventually I think we need to see these things break down at some point. Looking at the sectors that are doing high or doing well, we got old Papa Buffett. Kathy continues to sell. Kathy's getting hammered today. Where Uncle Warren is doing just fine, up 3%, hitting new all-time highs after earnings. So a little bit of a flight to safety type of thing. And I think that's the most evident with RSP, which this is the equal weighted S&P 500. So the SPY, the VOO, the normal S&P 500 is what's called cap weighted, which means the biggest companies make the most impact. To me, that makes perfect sense. You want your biggest guys to make the most impact in the overall market. So what we want to do is we want to be able to pull that out though and say, what about the little guys? How are the little guys doing? The little large cap companies in the SP 500. And they're doing much better. You can see that this chart never broke today's low and is actually green not only on the day, but is green on the candle as well. So it's above the high of the day. So there's just a lot of things pointing to the fact that the rest of the market is doing absolutely fine today, even though the big guys were down. We can see that in the heat map with, right, Nvidia was down 2 or 3% at one point. We have Meta down, we have Tesla down, we have Palantir down. These big guys are down, but then you have a lot of these other names that are doing very well, where you have Nike, right? You have some of these other non-techie names. They're holding us up, and that's perfectly exactly what we want to see. So that's kind of my overall thoughts on the market is we need to have a close above yesterday's low. That's roughly where we are right now. So if the market did absolutely nothing for the rest of the day, I think that's super bullish because again, we had that flush that got everyone so scared, all the perma bears so happy, and then we can get a push from there. So let's start going through and looking at some individual charts. Again, I look at these from the swing trading kind of standpoint, unless it's talked, unless someone says otherwise. You know what's going to happen over the next couple weeks to couple months. And again, I don't know anything about most of these companies. I actually specifically try to avoid. Of course, I'm going to know what Nike does because Nike's gapped up today. But other than what sector they're in, all that, I'm not going to know whether right it has good earnings or bad earnings or whatever. We can see all of that here on our trading view charts as well. So first of all, Hollow was one that I was watching. So this is one where, first of all, you zoom out on a name like this. And if the stock is ever saying that it was $3,000 or $1,000 plus, it's probably not a good company. This company was never a $3,000 a share stock. What's happened is it goes under $1 to remain listed on the NASDAQ. You need to be above $1 a share. They can't get anything together to get above $1 a share. So they have to do a reverse split. You can see it's happened a couple times here, 1 for 10 and then a 1 for 20. So on the way down, this thing reverse splits over and over again. It is down a little bit today as well. It's hiding, gets that $100. Every time you do a reverse split, I can't see it here, but quite often they have probably raised money on the back of retail as well. This is just a thing that's in a downtrend. The problem with downtrends is you have bag holders. There are people who own this stock from $1,000, from $500, from $200, from $100. It's over and over and over again. That's what you end up seeing. So imagine you're the guy holding this from $50 a share. That's actually a pretty good price considering it was a $2,000 a share. If it gets back to that $50 a share, you're probably going to get out of your position, or at least some, and say, holy smokes, I was down. It had to 50x to get to my price. I'm going to take my money and kind of move on. You have a lot of those when you see a chart like this. A lot of bag holders, a lot of people just looking for an excuse to exit. Now, for a short-term trade, you're leaning against these lows right here. If you're kind of leaning against the 125 lows and you're looking to see maybe it bounces and you have some sort of catalyst in mind, that's great. But this isn't a chart that's just going to drift higher on its own. There needs to be that catalyst. There needs to be some news event that comes out that really gets people interested in the market. For me, I think, right, you just leaning at the lows is just something that makes perfect sense, right? STAI, well, it has AI in the name, so it must be going up. No, so this is another, again, just another little tip. Anytime you see this just sideways price action around $10, means it was a SPAC. Most of these companies, when they de-SPACed, have done something like this, where they've gone from $10 to to near zero. A lot of them have gone to zero. And then a little bit of a bounce from here. But just like I was talking about before, you can see each of these bounces get sold into. It's just the nature of it, right? So you have bag holders that are selling into these bounces because they're finally getting their money back. Maybe they're getting up a little bit of money. There's nothing here that's telling me that this is a change of trend, right? Nothing that is moving one way or the other when it comes to the overall trend. Where you to see that, what you want to see is in this when this pulls back, it makes a higher low. And essentially buyers come in at a higher price. Again, I'm one that very much demystifies technical analysis. I don't believe in any crazy bat patterns or right cycles of the sun or whatever. It's just buyers and sellers and trying to look at the chart and saying who's in control. Right now, sellers are obviously in control. If the price comes down and it makes a higher low, it digs in here and say, it digs in at $2 and then starts to push higher again. Well, that will be the first time that that's able to do that. That price has been able to make a higher low and push higher. For these kind of broken names, that's what I generally want to see before I get involved. Right now, there's no evidence here. Every time you get a spike, it's sold into and the stock makes a new low. You get a spike and it's sold into. If you look at some of these names that change that, are GTI. You could see a lot of that occurred before here in RGTI in these quantum names, right? They spiked up and then they made new low, and then spiked up and made new low over and over and over again. These things started to get interesting when they had that push up, but then they pulled back and they made a higher low. So buyers came in at higher prices all throughout here, right? Buyers came in at higher prices. You didn't need to be early in any of these names. You just need to note this pattern of buyers coming in at higher prices. So, all right, let's take a look. Riot. I see people asking about Riot. So first of all, if we scroll down my list here, this is my ETF list, and you can see WGMI at the absolute lowest of all the ETFs that I watch, just showing that Bitcoin, even though it's only down a little bit, all these Bitcoin miners are hard names. Now, this is something I just mentioned that I don't talk fundamentally, but I worked in a crypto miner for a while in 2017, 2018. Feels like a million years ago in the crypto space. This is a really hard business to make money off of. Really, really hard business to make money off of. You can see here, right? They're continuing to lose money over time, and they're losing, or sorry, earnings. Yeah, earnings is down, and it's worse than expected in a lot of these cases. Even when they beat earnings, they made a little bit of money here. But the problem with these, the reason these used to really track Bitcoin very well is because there was no other alternative in the traditional sense, right? You had to trade these names. You had, if you wanted to trade crypto and you didn't want to put your money on the exchange, you trade at Robinhood, Coinbase, or one of these crypto miners. The problem is now there's tons of instruments to trade crypto in the traditional finance space, and ETFs and futures and Ether ETFs and maybe a Dogecoin ETF. I heard rumors of at some point that these things ended up kind of getting woodshedded because they're not going to follow Bitcoin as much anymore because it's just there's other ways to trade it. So that correlation broke a little bit. So basically you have Bitcoin, which hasn't done anything for a long period of time, but you have Bitcoin that loses money all the time. And that's what you have with Riot, is that this thing is just going to, until they can turn profitable, they are just hemorrhaging money over and over and over again. And they're tracking an asset that's not doing anything. So when it comes to a lot of these miners, for me personally, I'm taking a big step back because there's just nothing super interesting that these guys do. And what I would need to see to change my mind there is just a break, some sort of trend to develop. You can see all the way back since 2021. And then here's the high. So here's a simple exercise, right? We've got that low at $3 and we've got a high here at 50. And then ever since then, it's done nothing. So that's over around 2021. So for me, it's just you're trying to emulate an asset that you could just buy with an ETF, or if you want a leveraged version of it, you could just buy the Ponzi scheme MicroStrategy, and then you can buy the Ponzi scheme MicroStrategy doubled as an MSTU. Yeah, MSTU. If you want to go real crazy, you got something like this. So I just, and they just, again, they just hemorrhage money. So just not super interested. Tesla is an interesting one. So full disclosure, I own Tesla, and I have owned Tesla for a while, and then I bought a little bit more Tesla today. And that's just because, so this purple line right here is just an algorithm I run. I do a lot of my trading just purely kind of black box, just saying that, hey, Tesla got a little bit oversold. When it hit that blue line, you can see that was a little alert line. So I just took a little bit of a shot there, but just I'll always say that full disclosure, I'm a Tesla owner. Again, because of systems, not because of anything political or anything like that. As Canadian, I don't really care. But just knowing that this thing has been an uptrend, it's holding kind of nicely. I think from a technical point of view, it's this zone right here that it broke out of. We can call this kind of 350 down to 325. This area I think is very, very important because that's where we consolidated for a bit and then broke out of, and now we are back down to that zone. So this trade becomes pretty simple. This is a high flyer that is pulling back a bit. I like high flyers that are pulling back a bit. I want to make sure that when the situation changes and this is no longer a high flyer, but it becomes a broken stock, I have an area in which that's going to occur. And then for me, it's right here. So if we don't hold this 325-ish and we trade for a couple days below that area, I think it's time to go. And then maybe we end up getting something like this, where if we zoom out, we get a bear trap or a whoopsie, kind of the opposite of what I talked about what happened today in the S&P 500, but happening in the long-term chart in Tesla, where you have this breakout and then it just fades. And you have a lot of buyers that got trapped in. You got a lot of shorters that are shorting against this kind of 500 level. And if we end up breaking down from there, then this could be a short-term top. I'm hoping, obviously, as someone who owns some, that it's not a top. And if we end up getting back to that 500 and pushing through, then again, anyone who had sold out because it pulled in, they're probably going to be buying back. And more importantly, the shorts are going to be wrong at this price. So far, people who are kind of railing into the short side here have been 100% correct on Tesla. So for me, I think you got a pretty obvious area. We're in the low end of the area. If we can hold that, I like it. If we break, it's time to go. And quite often, that's how you'll hear technicians speak, is you have a price, and a price is usually a broad area. And if you can hold that price, great. And if you can't, it's time to go, right? It makes your trading much simpler. BBAI, somebody always asks about BBAI every time. So this is the junkier, I would say, kind of AI type play. This is going to move a little bit with Nvidia that has earnings this week. So I would say if you are holding this, understand whatever happens to Nvidia this week. I think the Nvidia earnings is the most important catalyst this week, period. Just because it's become not so much whatever the stock does, but it's kind of like a bomb that people hold each quarter, and then they look at it and just, please don't blow up. Please don't blow up. So as long as Nvidia can go, everything's fine. We still expect people to spend money on AI. And even if the price doesn't react to it, I think the overall market will just kind of breathe a sigh of relief and say, okay, everyone's worried about that quarter. They come out and they go, yeah, we really missed, or we think we're going to make way less money in the future than we initially thought. Those are the two things that could really kind of tank the market. And this is going to move pretty perfectly with Nvidia. So if Nvidia just tanks, there's no way that this more speculative AI play is going to benefit from that. And if Nvidia rips, this thing could participate as well. But like I just talked about with Tesla, I like high flyers that are pulling back. So far, this is a high flyer that are pulling back. And like the example we gave on some of those more junky stocks of buyers coming in at a higher price, that's the pattern that you're seeing here. Right? You're seeing buyers come in. So right there's buyers came in at that price, and they came in. Ooh, that's a massive arrow. They came in at a higher price, and then they came in at a higher price. So if this pattern continues, that is the textbook definition of an uptrend. buyers coming in at higher and higher prices. Every time it bids in, or every time it pulls in, you get that reaction. And the idea is simply what you're looking for is on every pullback, do you see the fact that people are excited that it pulled back, or are they worried that it pulled back? So to go back to the S&P 500 and what we were seeing there, still moving higher. People obviously this morning were excited that the market pulled back. They were pumped that the market pulled back because they bought. It's not, you don't have to be super crazy to see, right? They bought the market when it pulled back. People were excited that this pulled back. They said, "Oh, good, my stock XYZ is finally on sale. The market is on sale. I can buy it at what I deem is a good price." That's where this pattern and the fact that the market is turning higher, that's where it came from. So same if we go to BBAI, right? Just to quote Brian Shannon, which I know you guys have on all the time as well, he says, "Don't buy the dip, buy the strength after the dip." So as it's pulling in, you look at it and you say, is there an area in which I think buyers should come in? And if it does, what am I going to do? And if they don't, what am I going to do? Right. So at what point does this become from that high flyer that's pulling back to a broken chart? I would say if it can't hold this prior high right here, right? That's about 520 percentage basis. That's a big move down from here. That's actually cut in half. But this thing has also gone from $1 to $10. If you're trading something like this, you have to be okay with large percentage type swings. So if it comes back down to the zone, there's a 50-day moving average right there, and we start to see some buyers come in, then I think this is just a healthy pullback. If it ends up bleeding through that and ends up getting deeper into it, then that means this breakout area was not defended. People are not excited about this pullback. They're not buying into the pullback, and it's time to go, right? That's the idea behind that. ACB, weed stocks. Actually, so I always joke because this has been the worst sector. I think we can all agree by far in a very long time. This is an awful sector when it comes to the overall market. And I don't think there is a world that exists where the marijuana sector gets back to all-time highs. So I'm sorry if that just made me a bunch of enemies, but I don't think there's a of the what's like the Doctor Strange thing in Endgame. I saw the 10,000 universe. I don't think any of those universes we see any of these, whether it's Tilray or Aurora or any of these guys, go anywhere back in my lifetime to back where they are, that this is going to be $1,000 stock again. But I like things that people aren't expecting. And when Trump became president, you saw this massive drop in the cannabis names. They just figured deregulation and all of this stuff is far away because the other guy, I guess, was more pro weed than this guy. And I'm Canadian, so forgive me if I'm wrong on that one. However, ever since that pullback, it's been kind of hovering around this 325 area. The reason I'm looking at this is that if you're trading something that has a sector associated with it, you should always look at that sector, right? The overall sector is going to have a large proponent of what it is that your market actually does. So if it's one of those things that this sector can dig in and push higher, then ACB is actually one of the stronger names in the sector. And that's, again, just a bit of relative strength analysis. You look at the overall sector and you say, is mine doing better than the sector or is mine doing worse than the sector? And another example, so if we go PSIL, and this is the psychedelic sectors, then you look at something like MindMed, that's doing way better than, what was it, CMPS? CMPS, right? Which is not in an uptrend the way MindMed is. So if you're looking at MSOS, the different sectors, and you're thinking that marijuana sector is going to dig in here and push higher, then great, right? All you have to do is then go through the individual kind of names and take a look at, is ACB doing better than this? So there's all kinds of like ratio analysis and all this fancy stuff you can do for relative strength, but just let's sear our chart and sear this chart in your brain for just a little bit and then go ACB and go, okay, that's doing better, right? So this is a stronger name than the sector. Now, I don't think there's a universe that goes back to being $1,000 a share. I don't think so, right? But if you're looking to buy it around here, you say, hey, could it bounce to like 12 bucks? Yeah, probably. Like that's a double. That's fantastic. And the question is, where do you have to put your stop? Well, you got to say, well, if we can't hold this zone right here, that's kind of the area where I've got to look at to potentially hold my stop there. So again, it's one of those that you kind of have to have a game plan around. But of the marijuana stocks out there, I like the look of this one. I like the fact that it was an earnings surprise that actually made this jump, which just means that they made more money than everyone thought by a pretty decent margin, and their revenue was higher. So they beat on the top and they beat on the bottom line. Again, not a financial analyst, but if you're making more money than people think, that can't be a bad thing. So it gapped up. So now the question we got to ask ourselves is the same as BBAI and the same as Tesla. Is this a pullback in a high flyer move, or is this something that is um, going to be a broken trend? And I think what you do is you just pick like the low of this candle right here. You say if it ends up breaking, closing below that, it's probably going to go down and fill the gap, and it's probably not a thing that I care about again. But at some point, these stocks have to have their day, not all the way to all-time highs, not anywhere close to any of that kind of stuff. But could they bounce? Could this double and get to 12 bucks? I don't think that's crazy, right? It's just where it was last year. So yeah, it's a decent trade. Now, again, with all the caveats of this is just an awful business, just kind of like we talked about with Bitcoin mining. This is a bad business. They call it weed for a reason. You can grow it anywhere. Another way to trade this kind of stuff is there's this MSOS or MSOX, which is the leveraged MSOS sector. So if you want to go crazy, you just want to trade the sector, you can do this one as well. Again, massive leverage on this if you're that kind of degen. Let's take a look at. I see a couple here being repeated. I see a please there with deck. So let's take a look at deck. Deck looks very interesting just because of the fact that it is in an insane uptrend for, I think these guys make boots, just massive uptrend, very good looking overall stock when it comes to, anchoring from the 2021 high, a little bit overdone here in the short term. Now, sometimes these can be changes of sentiment. Something happened here, earnings, they said something really upset everyone, and now it's coming back down. However, it's that whole innocent until proven guilty thing for me. This is a very strong name that's pulling back a bit. So I would just mark areas that buyers came in to defend this zone in the past and look to see if that gets defended. And I just kind of highlight it. Right? We had buyers come in right here, kind of 135. We had buyers come in here at 140. We had buyers come in here at 150. So anywhere between 130 and 150, that's where we've defended. If we end up breaking down under that, well, now we've got, all the way last time buyers came in was 100. That's a pretty big down move for this. So this seems like a strong chart that's in a bit of a make or break type moment. For a short-term kind of swing trade, I like these looks where they're very overextended down to an area of support, because any sort of a snapback rally, you could see this thing from 140 to 150. For me, as someone who's just trading these things for income and all of that, that's a great little move. So this is one that I'm going to put on watch because it is an interesting looking move. If it holds this zone, if it breaks this zone, I think it might be time to go there. Now let's take a look at Reddit. Reddit is one that's very interesting to me. One thing that I always do when I see IPOs is I anchor a view up from the IPO. It just shows us this is the average price of anybody who's kind of owned and been DCAing into the stock from the beginning of its life. Right, the Reddit went IPO'd right here. It was no SPAC craziness, just a straight up old school IPO. As soon as it got through that, it had a nice little pop twice now from that IPO. And again, now like everything else, it's pulling back a bit. I'm going to give this the same analysis as I did with Deck right there, where, strong stock pulling back. We have to see it, look at where the last time buyers came in. Right, very simple analysis. Again, I'm not one of those guys who does any like really crazy million moving averages and 17 different indicators. you just look at it, you say, there's two things that technical analysis does a really good job of helping people out with. As someone who worked in the hedge fund space, the prop firm space, all that kind of stuff as well. Um, the one is trend. Simple, is the thing going up or is it going down? What does the trend look like over whatever time frame I'm looking to buy? Reddit, obviously in an uptrend. Nice, strong looking uptrend. IPO'd at 50. Now it's at went as high as what 225. Now it's 150. So it's tripled from its IPO. That's obviously an uptrend. And then where is the last time that buyers and sellers fought? And in the case that buyers won? Well, as we broke out of this zone right here, we came back and tested it like 4 or 5 times. And then finally we're able to break that out. So over and over again, this 160 to 150 area has demonstrated that there was people who were thought that was a good price for the stock and started buying for whatever the reason was. Who really cares? And that's the kind of analysis that I like to do as a technician. It's not nothing too crazy or too fancy. Just 150 for me would be, okay, this thing is pulled back to 150. It's come back here a few times. There was buyers met in at 150. If we can hold 150 and start to push higher, that's, you got a good little pullback here, right? Then your idea is, okay, at what point are buyers not coming back in at where they defended the price before, basically saying that they don't think 150 is a good value for this company anymore? Well, you just put a little stop below that, maybe 140 or something, and you say, okay, if we lose that, then I tried to dip buy, didn't work, it's time to move on. The thing about buying pullbacks is buying pullbacks and uptrends can be great. You can get really nice prices on very strong names. The problem with buying pullbacks and uptrends, let's go to CELH here. This one may be recovering now, but let's avoid like the last 2 or 3 days, and just look. At some point, people were buying this pullback. Every time on CLH, if you bought a pullback in an uptrend, it was a great idea, right? If you bought it, at 27 and then a pullback at 40, if you were able to nail anywhere near these pullbacks, of course, you won't get the same exact price you'll get anywhere in this zone. These were great trades. Now, at some point, it stopped working, right? It's the whole buy the dip works until the moment it doesn't. And the difference between people who are trading something and investing in something successfully and people who aren't are the people who have some sort of game plan to say, all right, it's no longer working. Let's say I bought the dip in Celsius 5 times and it worked 4 and it didn't work 1. I should still be well up on the position. I should still be doing fantastic on that position if that's occurring in that way. If I end up losing more than I made, then that means my risk management is completely screwed and I'm doing this wrong. I need to go back to the drawing board and think. That's what I kind of look at. The biggest examples of this are things like Peloton, right? Where this thing was an absolute monster and a lot of people made a whole lot of money. And then all of a sudden people started to buy this high flyer as it pulled back. And if they didn't have an exit plan, they got wiped out, right? So anytime I say buying pullbacks on high flyers, just know it works until it doesn't, and you got to have that exit. You just have to. I've heard this mentioned a lot. BALT, Innovator Defined Wealth Shield ETF. What is this? BALT Holdings. Looks nice, but it's obviously some sort of yeah, this is weird. So this is I need to research this ETF a little bit more. Is it holding in exchange options? Oh, so this is like a covered call strategy. So they're selling options against something, against probably the S&P 500. Yeah, this fund invests at least 80% of its assets in flexible exchange options that reference the S&P 500 trust underlying ETF. Flex options are exchange traded options, contracts frequently customizable. This fund is non-diversified. So essentially, long story short, for the nerds out there, this is just some sort of option selling type strategy. What happens in all option selling strategies, 100% of the time, is it is the I hate the penny in front of the steamroller thing. That's what I was gonna say. Think of it like the casino, except if you're selling options, you are the casino. And what the casino does is it makes tiny amounts of money on very small edge bets over and over and over again. Every now and then it gets slapped, right? Somebody wins the jackpot. They got to pay that guy a mill, but that's okay because over time they have the edge in their favor and they're gonna make that money. You can see just by zooming out in the chart, the same kind of thing happens with this one. So I would do a lot more research on what is um, what is the actual option strategy. Watch some videos maybe from Tasty Trade about the actual option strategy. Seems a little bit, I wouldn't say too good to be true because it's right. It's only up a certain percentage. I don't know what the distributions are like, but it's only up, yeah, 6% in this chart. But every now and then you're going to have something like this, right? And this probably was, if I were to bet the reverse carry trade thing. So what happens is every now and then in option selling strategies, you will have some sort of dramatic volatility spike. It will be uh, a war, it will be a natural disaster, it will be a bank going under, it will be something. Something crazy will occur 100% of the time. Just there, it will at some point, and the thing will just get crushed. And if that's okay with you, then what you do is you make up on the other end of it. So it's like people who sell options, like sell cover calls and sell straddles and all that stuff for a living. They will do absolutely fine over the long run. They will just every now and then you get slapped, right? The people, what is it? The guys who trade the wheel strategy, selling puts and selling calls. Again, they're all good, but every now and then someone's going to come along and clap you. So you just have to be okay with the fact that this is something that if you're going to be in, you're going to be in for a very long time. But yeah, this is a weird one. I would become very intricately familiar with the exact option selling strategy that they're doing and to make sure that it's something that you are 100% comfortable with, because you can see with this chart it's slow grind higher, and then every now and then you're going to have one of these that you're just absolutely going to get just clapped in, right? So just again, make sure you're okay with that. Baba. So full disclosure, I own Baba. I bought Baba in this area right here on a breakout, just FYI. Again, I will always try to do that. I may forget every now and then, but the reason I bought Baba was a couple, is that China is both breaking out and everybody hates it. And those are my two favorite things, is that when sentiment and price diverge, you have sentiment being horrible and price action being great, I think is one of the best things, and vice versa. You have sentiment really high and then the price is not confirming that. I think that is another great trade. So again, full disclosure. And analyzing the chart now, it is obviously very extended, right? I have my exit strategy. It's an ATR trailing stop for those who are interested, but so the exit is completely, I'm not even looking at it other than now for you guys. Uh, but it's very overextended. So, it becomes when it pulls back, when and if do buyers come back in, right? So if you zoom out, we have a big breakout zone. And like I've talked about all the time, you want to see breakout zones like this defended. That gives us a pullback all the way to 120, 119. It's a pretty sizable pullback. Might not be comfortable for a lot of people out there. But if that breakout is defended, then that's when you have that confirmation, right? You don't, charts that go straight up are fun if you're in them. Like I'm having a lot of fun holding Baba, but when I see it do a parabolic run up, quite often those are met with parabolic crashes, and that's not what I want to see. I want to be in Baba for a very long period of time because I think this is something that is a big evolving story, that there's going to be a lot of people having to chase into China because it's been beaten up for so long. It's just not a part of people's portfolios. So I want to see the natural ebb and flow of the market, which is I want to see push ups and then corrections. And I want to see those corrections end up being held. If you're holding a stock for a long run, you don't want to see this too much. So what I want to see is I want to see them pull it back to around somewhere where it broke out of, and then I want to see price continue. That to me is healthier action because it's proved to me that as this thing is selling, again, like I talked about, people are excited that they're getting it for a discount. I want to buy it, as opposed to, oh my God, it's selling. Let me get out and never touch this thing again. So that's my hope. I have no idea that that will happen, but analyzing a chart that's straight up like this, you really can't do. It's just, it has to pull back at some point. Another Brian Shannonism, right? Oversold conditions can correct through price or through time. So it either has to pull back or it has to consolidate sideways. Because at some point, you just can't have the price go up every day forever. It can go up way further than you expect, just can't go up every day forever. So that's what I think about BABA. I think that leads to a bigger conversation about China as a whole and FXI and all of these type of names. And it's just to say, right, we have this overall sector that has been beaten up for so long and is now finally potentially starting to turn. It's China, so it's going to be insanely volatile. It will be. It'll be crazy volatile. Um, that's fine, right? If you're okay with it. The last kind of caveat I like to give about China is pretend you are playing a microcap, pretend you are playing a biopharma or something like that, because all Chinese equities are subject to a couple things that are dangerous. One is just the will of the people. You know, remember Didi and Jim Cramer came out with the IPO and said buy as much as you can, and like 2 weeks later it was bankrupt. That can happen. Um, right? Understand that most of the trading that happens in these Chinese equities will happen overnight. Right? It will, by the time our market opens, their markets close or probably near close. So any earnings that come out, any announcements about CEOs, any announcements with the company will come out likely when their markets open and not ours. That's why if you look at this chart, you see an incredible amount of gaps in it, is because all of the trading is done somewhere else. So size yourself accordingly. You will not be able to get in and out at a good price, guaranteed. It's going to be one of those things where you're hoping that the thing just rips, and part of the benefit is you won't be able to sell it when it does, because hopefully it happens when the markets close. Again, could be a good thing, could be a bad thing, depending on kind of where you're sitting or where you're standing. For me, if you're ever doing China, you have to size down. You got to know that the volatility is crazy, and you need to make sure that you're trading accordingly, as if it was a biotech, as if it was, a quantum computing name or something. Hims is interesting. Hims is falling apart, kind of like PLTR. These things, for whatever reason, were moving together. I don't know why. Um, Hims is one that has, if you zoom out, it had this massive breakout area at like 25. And when it broke that, this is the exact same pattern that I've been talking about with you guys pretty much all day. You had 25, and then it came to 25, and it broke out, and it came back and retested. This is the right high flyer pulling back, getting support that where it was resistance before, and then ripping. The textbook pattern. Absolutely love this. I don't hold this now. I wish I could say I got all that move. I did get a buy here, and then I wussed out a little bit higher. Um, Now it's pulling back. So it kind of looks a little bit like the market, where right the market was weak and now it's holding. 1 second here. Oh, apologies. I have dogs. Yeah, now it's digging in. So again, it's like the BBAI, it's like a lot of these. You need to see buyers come in and hold these prices. I would be watching the low of today now as kind of my ultimate price. If we can hold above that, I'd probably be a buyer of Hims. If we end up breaking and closing below today's low, I I think that's kind of the end of it. Right? Again, these parabolic up moves generally will come with parabolic down moves. So make sure you have an exit plan if you're in it. I wouldn't be buying it here. Just again, seems a little bit too stretched. TEM. So this is another one. Full disclosure, I'm in. It's kind of cool that a lot of the names that you're picking out, I'm in. I got in this one right on this candle right here. So right around 55-ish, I think is my price. And the idea behind this was right, you're going to trade with the greatest investor of all time. then you should trade with Nancy. That's her name, right? And the other thing is, like I talked about with Reddit, I like when it comes to a new IPO, putting a VWAP on the IPO price. It says this is, if someone is DCAing, this is the average price of the average market participant. As long as we are above this, my plan is to stay long. If we break back below it, then I'll time to go for a little bit. But just like we saw there with hymns, what I'm hoping for is that same pattern. So let's look at this for a little bit, and then let's go back to hymns and do a weekly chart on hymns, where we had a breakout of a pretty sustained level, like a pretty obvious level. If you're doing support and resistance, it should be obvious. You shouldn't have to like squint and whatever. It should be an obvious level. So this is an obvious level, in my opinion, that we broke out of. We came back and tested it, and then we ripped. Now, of course, nothing will ever be that clean. But if we look at TEM, kind of the same idea. So this is what I'm hoping for. And if we don't get this, I will exit my position. But I'm hoping we got a little bit of a breakout. Then we're retesting that breakout zone and that we dig in kind of right here and then go. I don't want to see it really into the 60s. I want to see it kind of hold this 70s. So right now it's kind of, I won't lose money on my position from where I got in. But if it gets into that 60s and closes there for a period of time, then I'll just take the little bit that I got and go, because this should be a little bit of a high flyer, right? We should see that dip buyers come in, they buy it really strong, and then we take that run towards 100, which would be my kind of ultimate goal with this. I'd take out a large chunk of the position there and leave a runner on forever. I don't know. Maybe when Nancy sells, I'll get out, but I like it. I like the reason I really like this one too at these all-time highs is, let me take a look to make sure I'm right there. On a lot of people are short this name. So if I go TEM, I go to the short interest. I'm just doing this on another screen. Yeah, 24% short interest as the last reported, which was the end of January. So, right, a couple weeks behind. So maybe they exited their position, but nearly a quarter of the entire float is short. And it's at all-time highs. I will say this till I'm blue in the face, because Reddit ruined the idea of short squeeze. There's a lot of people out there who still say, right, AMC is heavily shorted, so it has to go up eventually. No, it doesn't. This thing is never going back to $300 a share from $3 a share, right? The shorts won. They have all of the opportunity in the world to cover. Same with GameStop, right? They got squeezed during that initial spike way back in the day, and then they had years and years and years and years to cover their position. So if GameStop is to go up now, it's going to go up because of fundamental reasons. However, if a quarter of the float is short and the stock is at all-time highs, that's the potential for a short squeeze. Most short squeezes. You got the weird GameStop thing where it was way too shorted for too long, and right, the event that we were all there for happened because of that. And then now you have this other thing where you have TEM and it's at all-time highs, and as of the last reporting, 1/4 of all shares are lent out there short. So that they have to be losing money. They are, right? So if, when the next report comes in, if they're still short or even more short, then that makes me more bullish, because it means they're leveraging into a position that they are wrong on. So that is my idea behind this particular name, is just, hey, I want a high short float and I want evidence that those shorts are wrong. Because if you're not wrong, you don't need to cover. You only need to cover when you're wrong. And if you're short and the thing has just been bleeding its entire life, good for you. You had a great trade. Yeah, so it's that combination of short and wrong that we're seeing on TAEM, which I absolutely, absolutely love. PYDN. That is not a stock. VRT. VRT was, if I'm right, this was like the AI utility play, I think. I think the idea behind this, let me just check. Let me read because this was like the strongest performing stock in the S&P 500 last year. I think it was right. Verve Gains design of service critical. Yeah. So they're basically used as the utility to power a lot of these AI type plays. So this is going to have a lot to do with Nvidia's earnings, right? Nvidia is the thing, and it reports on Wednesday, the 26th, after hours. So this type of play is going to be 100% dependent on what Nvidia says, because if you think about it, you have the S&P 500, that's the leader of the whole market. Then you have Nvidia, and Nvidia is the leader of the whole AI revolution. Whether it's rightfully that's all that matters or not, it doesn't matter. It is, right? If Nvidia says people are spending less on AI, this thing will absolutely crater. If they say that people are spending way more on AI, this thing will rip. Now, technically speaking, it's a little bit broken here. So it's under its breakout price. It's not quite oversold, but it's definitely broken this zone. So I would almost want to see it retake this area in through here, which is around kind of I guess the $100 area. Big psychological whole number that could make sense there as well. The this again with all the AI plays, for me personally, I'm not entering anything or exiting anything AI related until after Wednesday, because right, if Nvidia comes out with good news, you could see a 10% rip in a name like this, which as a utility is hilarious. If Nvidia comes out with bad news, you could see a 20% dump in this. So even though this company's earnings is done, the other one as well, right? Anything AI related, it is going to 100% follow these Nvidia earnings. So that's for me, it's just the only thing that I'm interested in when it comes to this. You could say the same thing, I guess, for Tempest as well, right? Where this is AI, but this is AI based on health. But I definitely think anything chips, right? SMCI, I know a lot of people are trading that. This is going to have a lot to do with how Nvidia does. The other guys, AMD, Intel, these are going to be really dependent on Nvidia's earnings. WRD, I don't even know what that guy is. Wild Ride. Yeah, I have no idea. Probably, but anytime I see a chart like this, it's just very low float kind of name. But yes, anything AI related, I think, is directly going to. Only thing that matters is what Nvidia says. And again, I don't think they need to blow earnings out of the water. I just think they need to not explode. They just need to have. They need to go. Everything is okay. And then once they do that, I think the whole market takes a sigh of relief. Let's take a look at the market. It's been a while since we've looked at this. Just grinding higher. Poor perma bears, man. That sucks. It sucks to be them. At least right now, anyway. They'll have their day. They always do. All right, let's look at a couple more here. Again, make sure you ask away. I hope you guys are finding value in this. I know I am. ASTS is actually something I don't own currently, but I want to. And I've done this talking with Jordan here before. The thing I really like about ASTS is this undercut and rally we had right here. We had a clear area of support around 20 bucks. We sold and broke under it and then just popped back through. This to me is one of my favorite setups when it comes to day trading, swing trading, investing, whatever. Is a very clear area of support or resistance that we broke under and then we ripped, because it just shows the same thing that we were talking about today on the S&P 500. There's people that are searching for liquidity and they push the stock or the name to where they can get that liquidity and then they gobble it all up. And the people who are doing that are going to be large institutions, right? Not retail dudes like us. So when I see that kind of, I've heard it called scoop and score, undercut and rally, bear trap, whatever you want to call it, I get really, really excited. Now, I didn't get this one at the time, and now it's consolidating right up here. So I think if this congestion here resolves higher, so talk, above like 32, 33, I am very interested in this name. I'll get involved because the long-term chart, obviously space is a thing. This is a theme right now. It looked like that theme was potentially ending with the breakdown that we were having here and got reversed. So for me, those are all of the recipes that I want to see. It's a hot stock and a hot sector. It is a high flyer that's pulling back. There was evidence that there was buyers in that pullback. Though that's to me the entire recipe of a potential discretionary trade that I want to take. Again, a lot of what I do is with systems. This is a really good look for me. And yeah, it's requested every time I come on here. So I know it's something that you guys are interested as well. I would say this move right here, this is, we can even mark this up. This was not retail. This was not us. This was smarter than us, bigger than us type people. All right, we do one more real quick and then we'll call it. Let's do IONQ. We can talk about quantum computing. Quantum computing, IONQ, Rigetti, qubits, whatever it is, they are going to move well, not on something like Nvidia's earnings, but just animal spirits in general. And the reason is because these aren't companies that make anything right now. They're companies that are researching something that potentially they can make the thing way in the future. So what happens is they're very speculative plays right now. So we can use these as overall animal spirits of the market. We can use this to say, are people really excited about risk on or risk off? Because there is nothing more risk on than buying something that doesn't even theoretically exist and probably won't in any sort of marketable way for many years to come, right? There's nothing more risk on about, we think we can do quantum computing in a way that makes sense in the future. If the market ends up reversing here and selling, I do think these might be one of the first sectors to get hit, because if I'm looking to raise money because I'm worried about the market and I want to raise cash in order to buy it at a better price because I think the market's going down, I'm not going after my Apple. All right. I'm not selling my big profitable company that does well in all markets and pays me a dividend, blah, blah, blah. I'm going after the speculative kind of plays. Now, the reverse happens. If we end up just screaming to all-time highs and everyone gets super amped up again and they're back in action, everyone's super excited to be there and the market's doing amazing and all of that, then these names should perform well, because again, they're as pure of a risk on play as I can think, even more so I would say than Bitcoin, simply because they are doing that very cool thing of trying to build something that doesn't yet exist and racing to be the first one that does it. The other idea I have here with this is kind of like the psychedelic sector. The guy who figures this out the first and gets FDA approval is going to be stupid rich. And then the other ones might get dragged up a little bit with it, but not nearly as much. So I would say that's the same for all of these names. So whether it's INQ, RGTI, qubits, a lot of these things will look the same. If one tanks, I doubt you're going to see the rest of them do fantastic, right? If you look at them, especially today's candle, they all have that same kind of pattern of they were undercutting support early and now they're holding on. QBTS, I think it's the other one here. Yeah, a lot of them kind of look the same. So not trades that I would take right now, but if the market starts to drift towards new highs, these bases resolve higher, then I'm very interested in that. So that is my lunch hour. I appreciate everyone who hung out and did the like button and shared it around and all that stuff that people on the internet tell you to do. I appreciate you all coming by and ask questions, and I look forward to seeing you guys Friday and then at this time again next week.